JSW Steel surging in trade on the back of Q3 performance. Listen in to this conversation.
Now, straight getting into the numbers, of course, your profits look pretty good, but it is with a one-time gain that you've got, which is not recurring in nature and not operational as well. So what really transpired which impacted the profitability of the company in the last quarter?
So the net profit of the company was, it was impacted by a gain from the BPSL deferred tax asset creation on the slump sale of the asset. So that's, if you exclude that, and if you exclude the impact of this 529 crores, which is on account of the change in the labor code regulations, our profit would have been about 1,500 crores, which is the one which is excluding this net deferred tax asset and this labor code change.
All right. So operationally, besides the one-time hits that you've got, it would have been still up on a QOQ basis. Right. Now, sales volume, that has hit record levels in this particular quarter due to strong demand. How is this realization as well as the demand propensity right now?
So the last quarter, the last year, I think has been a very challenging one. In particular, global uncertainties, affected the sentiments. The prices did fall to a multi-year low. The realizations, therefore, were impacted. But we could mitigate the price drop through a mix in our, the product mix was enriched. Our value-added sales and special products sales were the highest ever. At 4.54 million, it grew by 16% YOY, and that offset some part of the price impact in the market. Our overall console sales and Indian operation sales did very well. Domestic sales also went up by about 10%, which is much faster than the market growth. We have been able to show very strong operational performance in this challenging environment. The operational production numbers have also been good. The capacity utilization was 93%, excluding the BF3 at Vijayanagar, which is at a shutdown for capacity augmentation. The important thing to note here is that we have been consistently maintaining high digits of capacity utilization, throughout the quarters, usually 90% and above, and that's a strength which we have built over time. So volume numbers good. Value-added product mix numbers offset some of the price impact in the market. There was an increase in amount coking coal by about $5 or so, but which the realizations mainly impacted the market, but the volumes made up for some part of the impact, the increased volumes.
All right, so volumes have offset some bit of the hit on the margins that was coming in because of cost escalation and the price being slightly under pressure. So when we look at this particular quarter, Jayantacharya, the present quarter, how is the pricing outlook, raw material cost and overall realization along with the demand really looking?
So, post the the lows, we have seen the prices moving up in the end of December and beginning Jan. The price environment has moved up, so prices have also recovered to some extent. We also see a cost impact because the coking coal costs have gone up. There are some regional disturbances seasonally in Australia, which have impacted and some of the mines which have gone under shutdown for some challenges they have, that has impacted the coking coal cost. We expect about $15 to $20 impact on our Q4 coking coal cost based on the current numbers we see today. So the prices of steel are favorable. The coking coal cost, there will be an impact. Iron ore, we see more or less range bound. So the margins should improve from the Q3. I think after offsetting some of the cost increase which I mentioned.
Right. So another factor that you mentioned was the shutdown of Blast Furnace 3. But of course, you also have a ramp up coming in the production on a year-on-year basis because of Vijayanagar Metallics. For this particular quarter, how is that aspect looking when it comes to production and the shutdown? Has it been taken care of?
So the shutdown started in September end, and the BF3 would come up after the capacity augmentation by March 2026. JVML was producing in the last quarter almost close to capacity, rated capacity, and has done very well. Actually, that was one of the reasons why the volumes was able to be higher. And also, we liquidated about 300,000 tons of inventory in the system. In this quarter, we see better volumes. JVML ramp up to some extent will happen. The blast furnace 5 is doing quite well. However, we also see some more inventory liquidation possibility, which would aid the volumes. The seasonally strong demand, which we see in quarter four, I think will be a driver of volume in this quarter.
All right, very important points there, but you also mentioned that pressure on price and other factors were mitigated by the good product mix of high value added products. Another factor which really plays a role here, Jayantacharya, is the product export as well as the domestic sales mix. Here again, you have bolstered export to some extent in the last quarter. How is that expected to be in this quarter, and especially with this whole tariff war uncertainty? Is that also impacting your business or likely to impact?
So the export volumes have marginally moved up, but if you see as a share of the overall, I think we were at about 11% exports. I think we have been in the range of 10% or so in the past few quarters. So more or less similar. We don't see that changing too much in this coming quarter as well. Our main focus would be the domestic market, because as you are aware, the external market has challenges. There are many countries which have imposed various trade barriers on steel from other countries. So there are external headwinds which we have to face. Exports would continue in this range, but the mainstay will be the domestic market, which is growing very well.